Hey everybody, hope you're all well and hope you're all staying safe. You're probably in lockdown. Most of the world is in lockdown, including myself. And with that, I'm sure you're finding a lot of time on your hands. Obviously, there's some of you that are working from home and that are used to that, but I think for the majority of us, we're used to commuting to work and getting stuff done, and on the weekend going to the beach and just living normal life. And that came to an abrupt end for some of you before, but for myself, I've been in lockdown since the 20th of March. I live in a small little island called Mauritius in the middle of the Indian Ocean, where we had a bit of a hard lockdown. And yeah, it's been something new to experience. I think it's a once in a lifetime thing. Something certainly that my kids will probably be telling their kids about in the future. And I'm pretty sure we're not going to forget it for some time to come. Anyway, something a little bit different from the usual podcast that I have been doing, which I have taken a hiatus from for quite some time now due to being quite busy with other business activities. We thought that we'd use this time to launch a stream which we can go over some of the daily news, what's happening within Bitcoin and the larger cryptocurrency space, perhaps even touch on markets, traditional markets, what's happening in the global economy, and then look at some technicals and fundamentals, go over some charts, perhaps do a little bit of technical analysis, different techniques that we use, and maybe even look at some of the fundamentals and some of the events that are coming up around the corner. This is purely for entertainment and educational purposes. Take the information as you will. It's not financial advice, and it certainly do not trade based on anything that we say here. It is purely for fun and entertainment, and hey, I've got nothing else to do, so why not create some content? It's absolutely for free. What I will say is, if you do want to support the show, please share or like it, and also if you are looking to buy Bitcoin or any of the other cryptos, have a look at what I've got up on screen now. It's called CryptoFish, cryptofish.com. If you're in Europe, you can use SEPA as a method of payment. If you're in the US, you can use ACH. Wire is coming soon for the US. There is UK bank transfer, and obviously internationally you can use debit or credit card. We will be adding other payment methods shortly, including in Australia and South Africa as time goes by. But yeah, it's a really easy platform to use. It's non-custodial, which basically means, for those of you who don't know, you hold your private keys, you have your own wallet, and this platform merely acts as a purchasing mechanism or a broker mechanism. So in other words, once you've made your purchase, the Bitcoin or whatever crypto it is gets transferred directly to your wallet. We do not hold it in custody on our platform. On here you'll also find a learning section where you can go to Bitcoin 101 and learn about Bitcoin. My internet connection is a bit slow today. I wouldn't be surprised if it's because everybody is at home using the internet. So anyway, we've got a section here, what is Bitcoin, and if it would load, that would be great. There we go. And it's quite a long page. You can navigate on the right hand side if you want to learn everything about Bitcoin. Yes, you can subscribe to our newsletter. And likewise, we've got the same thing for crypto, blockchain. We've got a Cryptopedia. We've also got a learning portal. It's all absolutely for free, guys. You can use it as you wish, take it as you wish. We do have an affiliate program if you want to refer people to come buy Bitcoin through us. We've got a news blog site, frequently asked questions, and then of course you will have the section about us, where you'll find myself and my partners. And that's that. Okay, enough boring news about sponsors and things like that. Let's get on to some more interesting information. Let's start off with the big news. Well, as far as I'm concerned, from a fundamental perspective, is that we've only got 16 days and, well, as it looks right now, 1 hour left until the next Bitcoin halving. Now, for those of you who don't know what that means, that's okay. Here I am. Every 4 years, approximately, Bitcoin emission schedule, right? It drops in half. So currently Bitcoin is the Bitcoin network is releasing 12.5 Bitcoins every approximately 10 minutes when a block is mined by the miners as a reward. Now in 16 days and 1 hour, that block reward will drop in half. So that will become 6.25. Why is that significant? Well, basically the inflation rate of Bitcoin will be dropping in half. And since it's a known thing, it's baked into the system. Every 4 years, people get quite excited about it, and this will continue right until the end, when basically there's no more Bitcoins to be mined, and then perhaps we'll just be relying on Bitcoin fees to reward the miners. So it's quite the opposite of the current fiat system. Okay, the current fiat system has no planned emission schedule. It is left to the whim of a bunch of bankers who sit in a private room and decide what that emission schedule will be. And currently, it's just brrr, the printing presses are going crazy. So it's quite a significant event for Bitcoiners, and it is something that obviously speculators like to gather around. People speculate that with increasing demand of Bitcoin and lowering the emission schedule or the supply, we're not lowering the supply, but we're lowering the rate of increase of supply, that this will have a knock-on effect which will have a pump in price, or as the moon boys like to call it, we're going to the moon. Now, in previous halvings, this has been the case, but there's always this argument of whether it's already baked in, whether it's already priced into the current price of Bitcoin because it's known information. I don't know. I'm not here to make that call. I admit I have no idea. But what I can say is we do know that this event is likely to happen in 16 days from now, or there or thereabouts. And it does open up room for market, not manipulation, that's such a dirty word, but I would say it does open up the door for, let's say, roping some naive people into, let's say, less desirable positions in the market. Because I'm sure you've all heard the rumor, not the rumor, the saying, buy the rumor, sell the news. Well, this isn't a rumor, it's going to happen. And when it does, it's very likely that you will have a drop in price, initially at least, as those people take profit in the price increase running into the event. Look, I'm not saying it will happen, but it's likely. And even if I look at the last Bitcoin halving that we had, I remember at the time there was a run-up in price leading into the month before the halving. But the month of the halving itself, July, I think it happened on July 9th, 2016. From that point onwards, we had price decline for the next month and a half. Now, for those of you new to Bitcoin, you're probably expecting that because there's a halving, that exactly from that date, suddenly the price is going to quadruple or something like that. Maybe you're right. But just looking at history, it doesn't seem like it does that. I think it takes a bit of time for that effect to work its way through the system, whether it be miners adjusting because the difficulty has adjusted because of miners dropping off, new miners coming on stream, hash rate increasing, whatever it may be. And it is a significant event, and I just don't know whether it's a tradable event. I would say that, being a firm believer in Bitcoin, that yesterday was the best time to buy Bitcoin, and the next best time is now. Trying to hit a home run and buying it at exactly the right price point is very, very difficult, unless you're a trader and you're thinking short to medium term. But if you're thinking long term and you're buying Bitcoin, if you bought Bitcoin at $3,000, you're up now. If you bought Bitcoin at $5,000, you're up now. And in 2 years from now, if the current price is at $7,000, just shy of $7,600, in 2-3 years from now, if you believe in Bitcoin, will be $20,000, $30,000, maybe even much more than that. It won't matter whether you bought it today at $7,600 or a few weeks ago at $3,500. It really, really won't make a difference. So it really does depend on your time horizon. Obviously, a day-to-day trader will be looking at sort of imbalances in the market and trying to capitalize on that. So, he wants to get an edge and buy low, sell high, or short the market, sell high, buy back low. And that's fine, but it just depends what perspective you're coming at it from. And tying into that, the next story that I'll pull up on screen now is from Bitcoinist.com. It caught my eye. It actually came up on TradingView. Is the Bitcoin's bull case gets massive boost as calls for negative interest rates mount. Now, the takeaway I get from this is what they're saying is that, with negative interest rates, there's going to be a cost to holding money. Now, a lot of people think, well, how can there be a cost to holding money? Well, basically, we've had a very good example of this just a couple of days ago, where we had negative prices on oil futures, where I think they went down to negative $37, and people were scratching their heads and how can something go to a negative price? Well, it's actually quite simple if you think about it. Those were futures and they were to take delivery. So people who are holding those futures would have to take delivery on expiry of those futures. And that's not what everybody plans to do when they buy futures. They're usually doing it to hedge positions, or they're traders in the market. And right now, there is a oversupply of oil around the world. There are oil tankers sitting around the world. All the storage facilities and that are full, and the demand for oil has dropped significantly. Two factors here. Obviously, you had a bit of a price war between the Saudis and Russia, but I think a bigger effect, which we're going to see, and people are pricing into their models right now, is the lack of economic activity. And the future, or I don't know how far we can look into the future nowadays, but it doesn't look that rosy. It doesn't look like economic activity is just going to switch back on. So people are not hedging and buying because it doesn't look that great. And the reason it can go into negative territory like that is because there's a cost to holding the actual spot, the actual commodity itself. Storage costs, transport costs, security costs, and all the like. And that's factored into that negative cost there. So in other words, yes, you could pick up a barrel of oil for negative 37, but the cost of actually taking delivery of that, whether it be transport, storage costs, and security costs, and there'll be a whole barrage of other costs, actually outweigh that, which is what actually caused the oil to be so undesirable as such. And so you get that. So now let's cast that back to negative interest rates on cash. It's the same thing. There will be a cost to actually holding cash. It would be cheaper to actually spend it, or to push that cash into other, more hard forms of money or hard assets, where you can get a yield in terms of a return. And so what they're saying here is, basically in this article, is that with the printing press is going crazy, the theory is that the value of money will be declining. And purely from an inflationary point of view, but also from the perspective that with negative interest rates, you have to you have to pay to keep your money. Much in the same way that if you had to store the oil, you'd have to pay to store the oil, which would outweigh the value of the oil. And many are predicting that they'll have a bit of a death spiral in terms of fiat. Even if we look here, Tyler Winklevoss, one of the twins who apparently came up with the Facebook concept before Mark Zuckerberg stole it. Negative interest rates, what could go wrong? So, a lot of people are quite worried about this, and, we don't know. I don't think we've been in this territory before, and it's something that we have to think about. How would that affect Bitcoin? Well, if people are trying to get rid of their cash and they want to move into a harder asset, perhaps they move it into Bitcoin. I'd certainly think they would move into gold. It's trusted, it's been around for a long time, but maybe there's going to be a spillover into Bitcoin too. So that is definitely something to watch and certainly keep an eye on in times like this, where the printing presses are going mad and yeah, let's see what happens. Okay, the next piece that I want to bring up is the Crypto Fear and Greed Index. Now, for those of you that haven't heard of this, this is quite an interesting indicator, more of a fundamental indicator, although they do take a few different sort of data sources here. Let's just go through the data sources. Actually, let me first explain what it is. Basically, you have a fear and greed index, which in the normal markets or traditional markets we call a sentiment index. So basically, they go out into the market and they have different sort of sources of data, whether it be polling, simple polling of people, looking at social media, or looking at technical analysis in the charts, fundamental analysis, and they have different weightings for these different data sources, and they weigh it all up, and they come together in a sort of what they even call here a multifactorial crypto market sentiment analysis. Well, I think I'll just call it the fear and greed index. Basically, it's very simple, as you can imagine. The lower it ticks, the more fear there is, and the higher it ticks, the more exuberance and greed it indicates. And generally, why do we look at this? Because markets generally get overcooked or over exuberant, and it tends to lead off to a blow off top and a retracement or a pullback, or maybe even a crash at worst. And likewise, and that's generally when there's too much greed in the market, too much exuberance, nothing can go wrong. You generally hear this is when you hear the cab driver or the Uber driver telling you which stocks to buy, and don't worry, buy any stock, how much he's made in the last year, and nothing can go wrong. That's generally when the market is full of greed and over exuberance, too much confidence, and that's when you normally have some sort of correction at a minimum. On the other end of the scale, you have the fear, and that's when the market's crashing and there's despair, and I mean right at the extreme, and complete despair, devastation, and distraught, and I give up, and why, it's never going to go back up again, and this is terrible, I've lost all my money. And we're talking about general sentiment here. And that's generally when things turn around, when smart money is busy accumulating, and at some stage it reverses, and it gets marked up in price, obviously leaving all the people who sold at the bottom behind, as they have disbelief that the market is going back up again. So why do we look at this? It can generally aid, I think more the feeling of the market. And although the middle of the road and the fear and greed index probably doesn't help that much, when it does get extreme reads, especially for a sustained period of time, and if you look here, you'll see that it's been extreme fear for the last month. And I mean, it read at a 10. I mean, that's extreme. That's quite a long time, and that's what probably led to this run up in price over the last week or so. So yeah, I think the extremes can, tied in with other analysis, can sort of give us a general feel of where the market's at, and sometimes it's good to take the contrarian view on that, especially if it's a sustained sentiment. Let's have a look at what they actually put into this. So they're quite open and transparent about what they put into this particular sentiment, and a lot of different market sentiment indicators will have different sort of data sources, or at least different portions will be to different sources. For this particular one, volatility is given 25%. So yeah, you can see that they corresponded to the values of the last 30, 90 days. So yeah, I think what they are saying is that an unusual rise in volatility is a sign of a fearful market. Yeah, it kind of makes sense. When a market does crash, it seems to have more volatility. Market momentum, so they're looking at the momentum of the market. They put 25% there. Social media, this is interesting. So what they do is they trawl Reddit and perhaps some of the other illustrious social media platforms and get a general gauge of what the sentiment is. People are sort of more generally bullish or more generally bearish. And then yes, polling. So they call it surveys. I call it polling, but surveys. So they obviously contact a whole bunch of people. So usually they say to 3,000 votes. Okay, so I mean, this is pretty simple stuff to do. They can send out emails, or they can post on platforms like Reddit or Twitter. And but you know, it's important to know that the sample size is only 2 to 3,000 votes. So yeah, how much weight we have to hold on that, I'm not sure. But anyway, it's a window into what social media is thinking. Dominance, so they're obviously looking at the Bitcoin dominance as a factor. I presume that it's in terms of the other cryptocurrencies or altcoins. I'm not sure why that plays a role there, but let's see. It says analyzing the dominance for a coin other than Bitcoin. You could argue the other way around, since more interest in an altcoin may conclude a bullish greedy behavior. Okay, yeah, maybe, perhaps. And then trends. They look at Google Trends. Now, for those you don't know, Google Trends, type into your Google search bar, go have a look at it. You can check market sentiment or trends based on whatever keyword you want. You can type in USA and see how that's trending. Donald Trump, if you want to see what's trending with him. Likewise, you can type in Bitcoin and you can see the trends in terms of searches. So if you do go back to end of 2017, when we had that huge run up in price up to nearly $20,000, you'll see that it marked its highest reading on the Google Trends platform. I think it was like 100. And conversely, I think if you look at somewhere around November to December 2018, when we had the crash from $6,000 to $3,000 odd dollars, I think it probably ticked at its lowest reading, and interest after that was waned completely in terms of the trend. So I can see why they put that in there. That's quite interesting. Yeah, just something useful for you guys to use. If you're already using it, great. If you haven't, well, I hope it helps you. It's certainly something that yeah, you can check out when you have a bit of doubt, or if for those of you who do read charts and things like that, if you want something to add to your go-to arsenal of tools. There it is. I'll be showing a lot more other tools as we go along. These are the basic ones, and I hope you enjoy it. And yeah, so now what I would like to do is go on to some charts, and I've got a clean chart here. What I'm going to do is I'm going to mark it up the way that I like to mark up a chart. If you have your own way, that's great. For those of you who want to learn a bit, that's great too. This is purely for information and entertainment, nothing more than that. And this is how I like to start off with my charts. I'm using the Bitstamp chart. It has more price history than BitMEX, which I generally do like to use on the shorter time frames, but because I'm going to go on into much higher macro time frames now, I need this chart. So I'm not sure how many of you ever do this, but here we go. We're going to go into the 12-month chart. Now what that means is we're basically looking at a very strange chart here. It is the 12-month chart. So each candle literally represents 12 months of price action. That's right. So each candle, so this is the one that I'm on now, is the 2017 candle, 2018, then 2019, and right now we've got pretty much a doji looking candle on the 2020 candle, but bearing in mind we're only 4 months into this year, and it has gone quickly, I must say. Whew. I say only 4 months, but it's been a super fast 4 months. Anyway, what I like to do is mark off levels, guys. So what I do is I mark off, I'm going to start at 2017. The 2017 high on a closing basis for the year was 13,880, and the low is 966. What I'm going to do now is going to go through to 2018, the closing of 2018 and the opening of 2019, mark it off, and likewise the closing of 2019 and opening of 2020. Right, why do I do that? Well, for me these are very important levels, and I'll Let's show you why. Now, because Bitcoin generally, and a lot of markets generally like to do this, is at very important macro levels, they seem to come back and test whether the market agrees on that direction. So even if you look, let's go back into a monthly scale here. Right. Here we go. We all recognize this chart. It's a monthly time frame. What I'm going to do is I'm going to mark this off to make it easy for us. All right. We're going to put it at, I call it year open, right, 2018. Okay. So that way it's easy to remember, and you'll see it's marked off on the right hand side of the chart. And what I'm going to do here is, this was year open 2020. All right. Year open. I'm feeling dyslexic today. 2019. I think I've been isolated for too long. Right, have we got that right? Yes. Okay. Now, I want you to look at something very interesting. The run-up of 2019. Look at the high of this candle, this month of June 2019. Look how it tagged the year open of 2018. Interesting. Very interesting. Look at the low so far, the current low of 2020. Look how it's tagged the year open of 2019. Are you starting to see a pattern? I am. Anyway, I mark these off like that. Yeah, I'm not going to mark that off because why not? Let's put that there. That was year open 2017, I think. Let's have a look. Year open 2017. I am definitely dyslexic today, guys. All right, let's try that again. Year open 2017. Right. I must say, there is one thing that I look at now. We haven't tagged the year open of 2017 yet. It's sort of like a unfinished business. Anyway, I don't want to scare all the bulls out there, but that is quite interesting that we haven't gone back to tag that one yet. I'm not saying anything, but maybe we end up there. So let's drop down into a weekly time frame. Let's see what that gives us. Well, what it does tell us on a weekly basis, we are still closing weekly candles below the year open of 2020, which does seem to be quite a interesting level here. If we go back, we can see the whole of 2018 seems to play above and below this level. So it is an area of interest. I do find that quite interesting. And guys, we're only looking at price action. Yes, I do use other tools, a host of EMAs and SMAs and momentum oscillators, but just keeping it simple for this first episode. Price action, price levels first for me anyway. Everybody's got their own style and own way of operating. And yeah, that's the way it works. So another level that I do find very interesting is the 10,400 level, and this is on a weekly basis. I see quite a bit of interest here, around about 10,433. Yeah, we've got that there. We've got a few attempts up here, back again there to check it. Another test, and that led to that horrific drop off in price. So for me on a weekly basis, I like that level. And what I'm going to do is, just for the purpose of this stream, I am going to mark that off with a W. I'm going to call that I think I would like to call that the weekly, just for now anyway, swing high. Okay. Literally haven't ever used that symbol on my chart before, but I'm just going to do it just to keep things simple. And quite frankly, as long as we're below that level right now, in terms of how trends work, we've got a higher high here, a higher low, then we get a lower high, lower low, lower high, lower low. We did briefly close at a higher high, but then we made a lower low. So until we get above, I would say, at least on the closing basis, above 10,100 and 10,100 and just say 10,200. But more importantly, I would say, to be sure, over 10,443. Yeah, 10,433. We are still in a downtrend on a weekly basis. Why is that important? Well, basically, Bitcoin does seem to play out weekly trends pretty well. And if all you had to do was play the weekly trend, and you could have made a lot of money. So just like back here in 2018, we had a lower high, lower high, lower low, and so on and so forth. Even if you took a short here at 9,600, if you had just followed the trend until it changed, well, you would have made a healthy profit. So trading can be as simple as that. But again, it depends. You get different types of traders. You've got scalp traders, day traders, swing traders, and of course you've got people who take much longer positions, macro positions, in terms of the larger market cycles. And then you get hodlers who just hodl forever. It doesn't matter. Hodl to zero. Anyway, so I digress, but very basic terms, yeah, that's down to a weekly basis. There's a lot more levels here that I'm interested in, but right now I think on the weekly time frame, those are ones to watch. I would definitely say that this weekly candle of 13th of April, which has a low of 6,472, is also something that I'd like to keep my eye on. There is a lot of interest around there. I think if we did break below that, we could see much lower. I'm not saying new lows, but perhaps closer to the low 5,000s. That would be my weekly range there. And I think that if we do on a weekly basis close above 7,800, I think we could see us going up into the mid 8,000s, and quite frankly I don't see anything stopping us from about 9,000 at that point, which I would put a weekly line in there. So yeah, very much could play within that range. And if we did break above the 10,430 mark, 30 odd mark, yeah, I don't think there's much stopping us. I think we would start painting out a higher range here. But again, that's just mental gymnastics. It's neither here nor there. On a weekly time frame, yeah, things are looking pretty good. But yeah, that's how I like to mark my charts out. There is the opportunity to also mark out your monthly areas of interest. But generally, what I tend to find is they're very close to the weekly, so you could actually just adjust. So I'd actually take that weekly candle and I'll just bring it down here, right? It's just, it's basically areas of interest. It doesn't have to be 100% precise. You can draw blocks or squares and achieve areas instead of exact precise lines. It doesn't have to be exactly what to the penny, although it is quite beautiful, the symmetry in the market, how 2018 broke down and in 2019 it still came back to tag the 2018 open, and likewise 2020 has come back and tagged the 2019 open. I find that quite amazing. I'm not saying it will repeat, but it is something to think about. And there is a 2017 open that hasn't been tagged yet. A little bit of unfinished business there. So yeah, we have already tagged the 2020 open. We've actually are living above it now. So yeah, that could be quite an interesting thing to follow. I won't go much further than this, other than to say that yes, of course, you can go down into your levels and and add more precision to your levels. I sometimes like to color code them, but yeah, if I'm trading on a 12-hour or a 2-day, 12-hour, 24, 2-day, 3-day, I will mark up those specific charts and watch them very carefully. It depends on whether you're taking a swing trade, short trade, scalp, or whatever it may be. But nevertheless, that's just something interesting I wanted to show you guys. That Bitcoin likes to respect these higher time frame opens and closes, or even their highs and lows. It's not something unusual, but obviously Bitcoin moves very quickly and can tag back to previous opens in a much shorter time frame than macro markets do, especially if you look at SPYs, which has just been generally up on a macro scale forever. Even though, yes, you do get the 20% correction, or even I think this last correction 30-40%, if you zoom out into a sort of a quarter basis or a yearly basis, you'll just see the trend is up. So it's not something that you will generally achieve on those type of markets. I don't really want to go too much further for this stream. In the next stream, what I'll do is I will look at lower time frames, and we can start looking at some moving averages and perhaps some oscillators, and then start looking at some strategies in further streams. I hope that you guys have enjoyed this, and good luck out there in your isolations. Stay safe, and now's a good time to learn. So what we're going to do is we're just going to keep releasing content, helpful content. It's for free. Take it as you wish. Criticize if you like, but we've got free time on our hands, and why not share? I mean, why not share with people? And we'd be happy if you guys want to share with us. I will post in the description a link to our Discord that we've started. It's called Eagle Trade. It's absolutely for free. There's nothing. There's no. And please, this is not for signals. There's no signals. We don't do signals. We are not investment advice. Purely educational. Purely just to share ideas. And I hope you've enjoyed it. And let me know what you think in the comments. We'll grow slowly. We're not we're not hell bent on getting 1 million subscribers or anything like that. But I hope you enjoyed it. And stay safe out there and keep well.